You've been searching for the best way to generate passive income in your life and heard that real estate is a great way to do it. But you're tired of all the so-called gurus who are all talk and no substance. Get ready to celebrate because Kevin Buck has spent 14 years successfully making it happen. This is the Real Estate Investing for Cash Flow podcast. Now, here's Kevin Buck.
Hey guys, Kevin Buck here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income-producing real estate investments. And our guest for this week's show is commercial real estate developer and software developer, John Matheson. John is a managing member of Healy Development, LLC, a company that specializes in developing new projects into sustainable properties. John has been in the property development business for 26 years and has been involved in transactions for developing, permitting, and or financing of completed projects totaling over $50 million. Through Healy, John focuses on making multifamily, mixed-use, storage, and other commercial development properties more green and sustainable, lessening a property's footprint while increasing its value. In addition to his development endeavors, John is the CEO of Commercial Loan Success, a software and educational platform designed to help small business owners and property investors make more informed financing decisions. Using the Commercial Loan Success loan analysis software platform, commercial borrowers and commercial lenders are able to communicate more effectively, and borrowers are able to approach commercial lenders with much more confidence, already knowing that their transaction is lendable. Through Commercial Loan Success, John hopes to provide the resources and educational materials that small business owners, entrepreneurs, and real estate investors can use to confidently obtain financing and grow their businesses profitably, all without being at the mercy of the predatory lenders. Before we get on to the show with John, I've got a couple quick updates I want to give to you guys. I'm real excited to dig into John's business's background. Before we do, just got a couple quick updates. First and foremost, as I've been mentioning here for the past couple of months, we're launching our second mobile home park fund. It's appropriately named Mobile Home Park Growth and Income Fund. And we had great success with our very first mobile home park fund that was launched back in 2007, so last year. And we look forward to capitalizing on the incredible opportunities that are in our pipeline today and working our way into our pipeline. We've got a number of parks in contract, and we've got a lot more coming behind that. And so if you're an accredited investor has an interest in partnering with us, please be sure to go over to our website, sunrisecapitalinvestors.com. You can sign up for our secure investor portal, and essentially what that will do is that will place you on the first to know basis and allow you to proactively schedule a time to speak with me and my team in depth about this opportunity. You can actually also call us directly at 833-CASH-FLOW, and that's without an O. So 833-CASH-FLOW without the O. We set up that dedicated line for you to schedule time to chat with me and my team about this upcoming opportunity. Again, I'll mention that we have 8 parks in contract today, and we've got multiple others close behind. As you guys already know, you listen to this show quite often. You're probably already involved in real estate. You own your own income properties. The money in real estate, the real profit is made when you buy correctly going in. And I tell you that that's one of the many areas that our team excels at, and we'd love for you to join us on this journey. I'm going to say this, and I'm going to say this with the utmost confidence, that we are hands down the best in our space at sourcing off-market deals. I know I might get a little scrutiny from other people in the business, but I will say that we are hands down the best in our space at sourcing off-market deals. Okay, we've got a proprietary database that we've spent many years building, and we're really good at what we do. So again, call me to learn more about this opportunity. It's 833-CASH-FLOW without the O, or go to sunrisecapitalinvestors.com. Next up, guys, although we are great at sourcing opportunities, we also always look for more. So we're in buying mode. I mean, we want more deals, and we can't come across every single one that might be out there. We've only got so much reach on our own. So if you're out there looking for opportunities, maybe you're not in the mobile home park space, but maybe you're just out there pounding the payment for other types of real estate, and you come across what seems like a decent mobile home park opportunity or investment, please think of us. We'll look at any deals that are 60 spaces or above in size, and we can handle deals upwards of $25 million, individual deals or portfolios. If you have something that you'd like to discuss with me, run past us, I'd be more than happy to jump on the phone with you. You can just shoot me an email directly, kevin@kevinbuck.com, and we'll set up a time to jump on the phone together. Again, kevin@kevinbuck.com. That's my personal email, and I'll look forward to chatting with you. So I know you guys have been waiting for this. So let's welcome John Matheson to this show. John, how you doing today, my friend?
Oh, Kevin, I'm doing great. Thanks for having me on.
Yeah, looking forward to it, man. I've been waiting anxiously for the last couple of weeks to have you on the show and talk to you about your business and this awesome software that you developed. So I want to dive into a little bit about you first before we dive into this awesome software that you created for the commercial real estate space. And so if you would, John, take a few minutes, tell our listeners a little bit more about yourself and your background. I mean, you've been in this for, I think, over 26 years now. So, I mean, you've got a lot of time spent in the commercial real estate and development space. And so I want to learn a little bit more about you and how you got into it.
Yeah, sure. We all start somewhere in the business. And, as a young guy coming out of college, I had a finance degree. I ended up down at Wall Street.
Oh, poor you.
and it was classic because it was Reagan 2 when I was down there. It was the late 80s. Mm-hmm. And you want to talk about the Wild West of
I bet.
that business. And I started to ascend through there. And it was actually doing pretty well. When I decided to leave Wall Street, it was because I realized that I wasn't, in my mind, I just wasn't creating anything. I was just moving money all day. But there was actually, at the time, they told me this, that there was only 22 people that had a higher security designation than I did when I left. So
wow.
Go figure. So, and I left and I went right into real estate. And the reason I did is when I was in college, I decided it was a brilliant idea over the summer to not take a job mowing lawns or take a job in the restaurant space, as you would say, the required food service job of all of us at that age, right? And I went and got my real estate license between my junior and senior year. I took the course for it. And I was only 20, so I needed to be 21 in the state I was in Connecticut. So I couldn't practice. But the minute as soon as I turned 21, I got hired to work at Coldwell Banker, which was part of the old Sears Financial Network at the time. And I learned simple transactions in real estate over that summer. And I actually had to make commission income to be able to have the money to go back to school in the fall and have my spending money and walk around and have some tuition. So you learn by fire in a hurry that, oh, gee, this wasn't as easy as I thought it was going to be. And I ended up coming out of that summer and deciding, well, that was just, it wasn't quite for me. And I went into the securities market. And I put in that time through my 20s. But when I came out, I realized, I actually had to take a second look at the property business because I was only in the sales side and the development side always interested me. Mm-hmm. So when I came out in my late 20s and I decided I needed to learn how to be a principal in this business. So I guess I had a little different goal. And my goal was I wanted to be the real estate developer. And I think back then it was funny because all of us who would sit around in the 80s and early 90s, there was a few things we wanted to be. We wanted to be the restaurant bar owner, or we wanted to be the real estate developer. And of course now it's the software developer. So it's funny how that ascension occurs. But it was a drive for me. And one of the biggest things that motivated me is I always wanted, after my experiences in the city and coming out, I wanted to sign my own paycheck. It was a burning desire to just pay myself as an entrepreneur, whatever I thought I was worth. And I just saw real estate development as an opportunity to do that. And like anybody else, I mean, my first deal was small. I think I put $300, Kevin, into my first company. And, like anybody, what do you have to learn how to do? Raise capital. So I had to go out and I got a family loan to be able to buy my first property. And then I went down to the bank and I had a relationship I had built with a banker who actually gave me money to put a house up on the lot. Go figure.
Wow.
And we turned around and we sold the house and we took those profits and then we rolled forward and we just started buying more and more property. And I got an affinity for the land side of the business. And I really liked buying the building lots and then flipping the building lots over. And then I realized the light bulb moment that hit me early in my career was, hey, I can buy the land raw and then get it entitled. Mm-hmm. And so I learned the entitlement process and I learned the skill of putting the team around you of experts who do what you don't do to be able to assist you to move your business forward, because I wasn't the engineer who was capable of drawing the property or doing the computations for stormwater. I wasn't the wetland soil scientist. I wasn't the surveyor. I wasn't the lawyer who had to sift through all of the zoning regulations on a per town basis. But I was the one who could have maybe the vision of how I wanted things to lay out on the properties and how many lots I could get and how I could do it. And I started to move forward with doing the smaller subdivisions and then selling the land to builders. And one of my favorite builders to market property to was my father.
Interesting.
Yep, who was a fantastic builder. But, what I would always watch with him was as he would go different from on the land side, because I could do stuff with private investors and I could roll forward, and I wasn't necessarily involved with the banks and the small stuff, but he would get the construction loans to build the houses. And I would watch what he would go through, and he would have, sometimes he would speculate houses and he'd put them up. He'd do a wonderful job, light the doorbell, and the team would sell them, and he'd do a great job with that. But I would see him go through that process of banking, and the bigger the properties, and he would, in the end, when he was into bigger 30, 40, 50, 80 unit transactions, the bigger the bank loan and the more scrutiny that would go on to get it. And it didn't seem like a fluid process. There just wasn't a clean way for him to communicate going in with the banker other than using either bulky legacy software or using just bigger business plan type of discussions to try to get the bank comfortable with the process. And he and I did stuff together, and then I would sell to other builders. We would permit larger tracts of land. As with anything in your business, as you get started smaller and you learn that, hey, doing a 20 lot development is really the same as doing a 100 lot. Mm-hmm. It's just the numbers are bigger.
Sure.
And that light bulb goes off, and you realize you can leverage your time the same way. And you start to realize that due diligence is so valuable to you. And the more that you do, the better off that you can be in the land side. And we would scrutinize the developments and then get bigger and bigger and bigger with our sizing. And that would require bringing in bigger and bigger builders to buy it and to do it. But he and I would still do the stuff that was the smaller stuff in the gaps together. And it was just, the banking process was always a challenge. It didn't seem like it was fluid or seamless enough for me ever to occur. So when the recession hit of 2008 or 9, and, like you, I've been through a few recessions. I think I've actually been through 3 of them in my career. And what's interesting for me as I look back on it is our balance sheet grew through every recession every year. And I find that interesting as I look back on it, because we were able to take advantage of opportunities that were there in the land space that aren't always there at the end of the cycle. And sometimes you're also better lucky than good, for sure. we ended up selling some large developments out in 2005 and 6 that I wouldn't have wanted. Right. Yeah, right. Better lucky than good, for sure. But so it evolved for me from just a simple single land transaction to where we would get into space where we would be doing 100-unit transactions. And that ran right up to the recession.
Okay. So I know that you started off in the residential side, and you for a number of years, you continued in the residential space. At what point in time did you actually switch over to doing more commercial developments?
Well, that's it. So you start to realize that you can go from single family development space to development rights for multifamily. Mm-hmm. And that's where you start to realize it's the same amount of work on less property. And so we got into the concepts of the green building, sustainable use of the land, and being able to get more out of smaller spaces by being able to permit more doors on a piece of property than you can if you're doing a single family cul-de-sac road development. And that light bulb went off for me right around the early 2000s when that light bulb went off.
And now, were you guys primarily just taking the raw land and going through the entitlement process and then handing it off to a developer, or did you also see projects all the way through?
Sometimes we would. So there was things that we would build ourselves, and then we would also sell that ultimately. So we might have kept stuff through that period for 3 to 5 years. Typical type of development platform where, but what was always fantastic for us is you had money-making opportunities at different lifts in the process, because you might buy the piece of raw land, for example, for $300, and then you put money in, but then you'd get your entitlements, and maybe then it was worth 1.2. And then if you went to go build it, you might be able to enhance the value even further by getting profit on the land side, on the building side. So that wasn't as much, seeing it all the way through wasn't as much as what we did, as much as it was permitting the land and then taking the profits from the land, and we'd roll it forward into the next development.
Got it. I want to back up a little bit, and just for those that are listening that might not even understand what the entitlement process is, can you give us the dictionary view of what it is, or maybe your definition of what entitlement means?
Sure. So it's exactly what we do today. You're taking an undeveloped piece of land, wherever that is, and you're inside of every municipality now are regulations, and they're called different things in different parts of the country. Where I am in the Northeast, they're called zoning regulations. And the zoning regulation allows you to do certain things on the property in its location. And so you take the regulation and you apply it to the property, and your objective is to improve it into its highest and best use. So if you have a property in a particular zone where you have the ability to do multifamily, or you have the ability to do a car wash, there's nothing wrong with a car wash, but you're not going to make as much money on the land as if you put up a 50-unit apartment building. So you always want to take the zoning regulation, apply it to each property, look at it through the context of highest and best use, and then you put the capital and the resources and the brain power to work to figure out how to get it so that when you get in front of the town committees and the town zoning board, you get approved for that site plan and that use on that property.
Got it.
And that's where the money is. And what I do, that is where the payday is. When you sit there and you're suited up and you're in front of that zoning board and you have a 7-person board, you only need 4. And when you get the votes, that's where you've had a good day.
Okay, fantastic. I have a question for you. This is kind of a personal question. Would be a personal question from my standpoint. Would be, when you're going into a new project, are you guys typically? Do you typically know who your end developer or your end buyer is going to be before you even purchase that raw land and start working your way through that entitlement process? Do you already have them pegged before you dive in and start spending money?
Yeah, I do, but I've been doing it for a while. So I'll look at a piece of land, and if we're going to do, let's say, right now where we sit there, we have probably 400 units on the board of multifamily, mixed use, single family combined. Each one of them is a different buyer, and you kind of get to know the players in the space. And once you get inventory, and this, look at what I've heard you talk about this in other venues. He who has the inventory today really does rule. It's a very difficult task today to get quality inventory. So when we create the inventory, you can imagine we become, for old guys, we become some of the prettiest girls at the ball.
I love that analogy. That's good.
Yeah.
And so it begs a question, why wouldn't they just do it themselves? I'm assuming there's development firms out there that do have their own internal departments dedicated to this, but for the smaller developers, they don't, right? They do what they're good at, which is taking it from the point of getting the entitlements and carrying the project through to the end, right? Whereas your strength is taking that raw piece of land and getting entitlements in place.
Well, and we compete with the bigger ones. Obviously, our niche is to permit and then to provide the inventory for the builders that don't have that in-house team. But even the bigger players, if they're going to have an honest moment, will admit today that it's kind of like the stuff that's happened even in pro sports. Everybody's a specialist at their position. And it's hard to get specialists to be able to permit on a local basis. There's places I won't go to permit because I just don't understand the market conditions well enough or the town dynamics well enough to be able to feel that I can make the investment into the process and feel comfortable that I could come out okay.
Got it.
And that can happen with the bigger firms. They land into an area, they're more inclined in some cases to ask us, okay, can you get this for me in this town?
Mm-hmm.
And that's where, so now we're going to go out and actually and do that for them. So we'll permit with the end user in mind, or we might say, all right, we've got a site right now where we've got 72 units of multifamily. And that'll be out of the process and ready to go probably by September, October. Being in the Northeast, there'll be a line for those because it's brand new, permittable, green space multifamily. You just can't get that every day.
And how long did that project take you from beginning to when you actually will get the entitlements issued?
3 years.
Wow. Okay.
Yeah.
Okay.
Yeah.
So, and I'm assuming that's another thing that probably keeps some people out of getting into this space. I mean, you've got to have the liquidity in the bankroll in order to be able to sustain a 2 or 3 year deal cycle.
Yeah. I mean, in some cases, this is a particular one where we had a seller that was a process to go through. We had to tweak the zoning regulations with the town some. So in order to get sometimes what you want in a particular location, you have to be able to add some language to a regulation, which is never an easy task. But if the town likes it and they like the idea and they like what you're doing, they can be open-minded to it. So we had to modify some regulations. And then once you've done that, then you can go in for your entitlement process, your approvals. And you never know how that's going to end up, but the process is always part of it. It's either by right or it's by a special exception, and that's what can add the time to it.
Okay. How does one hedge their bets with knowing that we're so far into into the real estate cycle today? Every market's a little different, right? At different stages, but how does one in your space hedge their bets when it takes 1 to 3 years to get from raw land to a fully entitled property?
Boy, I wish I had that crystal ball.
Yeah.
Yeah. I mean, you're always putting yourself in the path of progress with land. So your market study guy is always your friend. Mm-hmm. You're always trying to identify in the front end, what's the overall demand and is there excess demand in the market for what I have? You're doing the normal types of studying that anybody does in your business or in the multifamily business, in any business. What's the employment base? What's the population base? What's the growth? What direction are things heading? And again, having, when you go through the recessions, right, it's like driving, it's like you're driving in snow is one skill set, driving in sunshine's another. So
I love it.
You're prepared for the snowstorm.
Yeah.
And it's never fun, but you have to be in a position to weather it. So what we'll do as just part of it is we can get our approvals. And if you haven't pulled your permits yet, your tax rolls stay as in the state that it was in when you bought the land.
Okay.
So you're not paying for taxation.
So your tax basis will be a lot lower, and you just basically hold on and weather, through the other side of the storm.
Yeah. I mean, the cost of my capital that day is now zero. Mm-hmm. I'm not getting a rate of return. You're riding it out. But you know what? You can take those down cycles. And when you do what I do, you can stare at the map and you can say, hey, you know what? I could have picked up 3 more units here. Or I could add a solar garden to this property and offset some of the energy costs for the common areas.
Gotcha.
I've got room to do that. Why don't I go do that today and add value to my property? It's repositioning land on paper, which sometimes you don't have time to get to when you're trying to permit and then get it out into the door into the market with a level of velocity to avoid a down cycle. Mm-hmm. But in the down cycle, you can say, you know what, let me look at what I have and make it better.
Got it. So just always, I'm assuming at least in the back of your mind, even in where we're at today, which we're not in down cycle, is you've always got a potential plan B of I need to change my way of thinking on this particular property because of, where things are heading over the next year or two.
Yep.
Gotcha. Okay. Well, very exciting. I want to talk to you about maybe some of the more exciting projects that you've worked on to date. I mean, are there any that stick out in your mind that just, were very unique, or just, again, just something like which I know right now there's one that you're thinking of. Which one is it, and why was it exciting?
We actually did, and this is back in the early 2000s, we did the first 55 and older project in a particular, in a northeastern town that had ever been done.
Wow.
And it was, so you feel like, am I on the right path, or am I putting myself out there into a market niche that is unexplored that I shouldn't be in? Mm-hmm. And, one of the things we learned is that, the pioneers always are the ones that make the history books and get the street signs named after them, but they're often the ones that got shot, right?
Yeah. Yep.
But yeah, we did. And what we did is we met with the town planner, who said, I don't want fragmented 15, 18, 20 unit at 55 and olders popping up all over my town. I want you to do one for us in one location. So we actually, we were able to permit 140 unit development right transaction for 55 and older in one location. And it required a zone change. It required public utility licensing. It required just a lot. But when we got it done, we were able to sell it, and we sold it in 2006.
Okay, perfect timing.
And now in our boardroom, there were arguments over, let's build this. Yeah,
right. How'd that project turn out for the developer? Okay.
He won like 7 awards for it. The development plan got awards. He's gotten awards. He's done now.
That's awesome.
It took him longer to build than he would have wanted because he had to weather the cycle, but it was a strong enough property and concept to play through. And he did sell through the recession. You have to, hats off to any of us who weather those recessions. We're like a Manilow song.
Yeah.
Have respect for everybody else who made it through too.
Yeah, exactly. Well, that's interesting. Just speaking to like 55 plus crowd and talking about the Northeast, it's pretty easy to do market research in the warm states, right? In the Sun Belt, knowing that when people get older and want to retire, a lot of times they head south, right? To the warmer weather, the weather that's going to treat their bones and their joints better as time goes on. Whereas in the Northeast, I'm assuming that market research and trying to really determine the absorption rate and if the demand's really there, especially in a uncharted territory this was in, that's got to be quite challenging.
Which is why it sticks out, because it's one of those things. My father always said, never stick your neck out farther than you can pull it back. And I just love that. But on that one, you just felt
stuck it out further. Right.
Yeah.
Well, very interesting. So I want to let's talk about lending now, which is really getting me into the conversation about your software program and what I'd like to understand about it. And I can speak to all the challenges with lending. In fact, I don't think that the process of going to get a bank loan, it literally has not changed. I've been in this business for 18 or 19. It literally hasn't changed in 18, 19 years. And it probably hasn't changed in 30 years. It's so antiquated and backwards. It drives me crazy. Good thing is that we try to work with a few very select industry brokers that help us package our deals and get them off to the, appropriate lenders. But sometimes we've got to go deal with the local community banks or the regional banks and do the whole dog and pony show. And it's just such an antiquated process. And it's quite overwhelming for someone just getting into the space. And it doesn't matter what type of real estate you're buying. Even if you want to go get a loan to fix and flip a residential property, I mean, it can be challenging and overwhelming and very intimidating. So with that being said, talk to me a little bit about your software program, Commercial Loan Success, and what it is and what it does.
Yeah, I mean, everything you just said. So how I got into the software is, and everything you just said is where the opportunity lies. And like I said, I watched my dad go through this and have the same type of frustration. And when you talk to any of us who are out there who have all taken a lot of commercial bank money, the process is never easier. It's never gotten any different. It's almost like, doesn't it feel like there's this mystery to the process? and you get frustrated with the unpredictability. And you're unsure of, we can all always learn ratios and formulas and the like, but you never really know what they're going to ask you to do with the transaction. And, for all of us in this space, we really can't afford to be out due diligence, time, money, deposits, only to find out our regulated banker can't do the deal. Mm-hmm. Or you have to put more money in to make it work. And when you've been doing this long enough, there's everybody on the call here listening today knows the absolute pain you and I are talking about. So we had a property post this last recession that we were hanging on to. We had actually gotten one of the only acquisition and development loans that this bank had given out in 2010. And we came into the 2-year term in 2012 and we renewed it. The bank and us talked about it and we said, it's still not time to put this property in the market yet. So we decided to continue to carry it versus try to build it and actually lose money. And we came up on our final renewal in 2014. And I had somebody interested in it. We were going to extend one more year and then put it in the market. And I figured, well, they're no problem. They'll extend for me. So I called the bank in, call it February. And I said, all right, I just need one more year extension. We'll get this off the book. And this is a bank I'd worked with for 15 years. And the bank says, well, we are looking like we're going to get bought. And we know that you've started work and, you're going to be partially through this. And, we really would like you to get this off our books. We're not looking to carry this type of asset through the merger. And we know you can. So we'd like you to do that. And I said, well, my maturity's in June. It's like 4 months. You're not giving me a lot of time here. Well, yeah, you can do it.
Oh, gosh.
And I said, well, what happens if I don't?
Darn heartless bankers.
Yeah. And he's like, well, I guess we'd have to, consider foreclosure. I said, what did you just say to me? I'm just, it's insane, the stuff that can go on. So instead from that moment, I'm sitting at this level of my career. And it was a pretty good size deal. It was over $1 million loan. There was enough out there to hurt. And so you're looking at it going, I just not going to allocate the capital to be able to pay this off. What am I going to do? I got to get this off the books. So I'm out there looking for another lender. So I'm calling typical other bank relationships and I'm getting this, yeah, we might be able to do it, but we're not sure how fast, and, call us in a month when we're doing other things. And it's like, nobody's giving me a warm fuzzy on what turned out to be actually a great deal. And so he said, I've got to get this solved. And now I'm up night. So here I am, Kevin, Googling online for a bank. And I'm like, this is crazy. Why am I doing this? I'm not going to put my social security number and financials into an online portal to try to get a loan. This is nonsense. I've got to network to a resolution. So a commercial realtor refers me to this guy. Name is Dan, who's now my partner in Commercial Loan Success. And I'm telling you the story of how this is how I got into the software. So I called Dan and his voicemail's full. And I'm like, oh, this is great. So 5 minutes later, he calls me back and he said, your voicemail's full. He goes, yeah, it's always full. I'm real busy. What do you want? I said, well, I've been referred to you. Here's what I've got. I've got pro formas, partially done deal. I've got all my income and expenses. He says, all right, meet me down at the local diner. And we'll go through your deal. So I walk in the diner. He's got this laptop. And I meet him and the laptop's facing me and I'm sitting down and he says, all right, give me your numbers. So I give him my income and expenses on pro forma, like all of us have on any of our projects that are cash flowing deals. And he's tapping on the computer screen. And now this is a deal I've been working on for over a month with no resolution. And he's tapping away and he says, okay, you're a go. And I said, what? And he goes, you're a go. He turns around the screen. He's got this great big green go on the screen, And I'm looking at him going, what do you mean I'm a go? And he goes, yeah. He goes, my software pre-screens your transaction against today's common commercial banking guidelines. And it tells me if you are likely a stop or a go to a commercial bank application. And now I'm sitting there looking at him going, what do you mean your software? And he goes, yeah, I wrote this. I've had it in my computer for over 25 years. It's proprietary to my business. And I said, so what's going to happen? He goes, I'm going to take this one sheet, and he's got it on the screen. He's showing me a what would be an ultimate output, just a one piece of paper. And he goes, I'm going to send it to my banks as a conversation starter, and I'll have you a couple offers, and we'll get this done in the next month or two, which is exactly what happened. And I said, but I'm sitting there going, now I'm shifting, Kevin, from what it is that my need is, which is acute, right? Mm-hmm. I'm shifting to what is it I'm looking at. And I said, well, what do you mean you wrote this? He goes, yeah, I wrote the code. And I said, well, I'd like to get this software for my computer. And he goes, we can't have it. I said, well, what do you mean? He goes, it's mine. You can't have it. It's mine. I said, do you realize what you have on your computer can help a lot of people? He goes, yeah, I've done over $1 billion worth of vetting of transactions and placement for people in property and business loan space with this. And I said, well, have you ever considered the implications of getting this out into the hands of people nationwide like me who dread the bank process because we don't have an effective way to communicate with them on the way in? And he said, yeah, I just haven't gotten to it. I'm very busy. And I said, well, how about I help you with this? And he said, sure. So we became partners. And we became partners in the software platform that now our collective goal is to go out there and we take the mystery out of the commercial bank process, and we empower every real estate investor and entrepreneur with the knowledge and likelihood that, you know, their transaction or loan is going to be deemed a go or not by a commercial bank before they ever speak to the lender. So think about that for a second, Kevin.
What parameters are you using? I mean, I know that every bank's got a different appetite for different types of projects. You could look at one bank, and just an example on the mobile home park space, which we're kind of in a boutique niche, but one bank will have a threshold that, you know, they're going to be at 65% LTVs. Rate's going to be, you know, whatever, 6% or higher at this point in time in the marketplace. I'm actually referring to a bank that I just had a conversation with the other day.
Sure.
And it's going to be they won't even push past a 20-year AM. They wouldn't even consider it. And it's going to be a 5-year balloon. Whereas in the same market, another bank's going to be slightly more aggressive. They're going to be a bank that understands our niche a little bit better. They're going to maybe push it to 70 or 75 LTV, do a 20 or 25-year AM, and be a little bit more aggressive on the rate options, and as well as on the balloon as well. So how do you guys, when it's a go, what does that really mean? Because obviously
Sure.
The parameters can vary so greatly from bank to lending institution to lending institution.
Yeah, no, fantastic. So, you would be what I would call a pro user. You're somebody who uses it like I would to communicate with the bank. And if you start to look at the software as a tool now to level the playing field and the initial discussion with these banks, as you told me you just had, the software has presets and it has fillable fields in it to address everything that you just said on a transaction. So you'd be able to take, if you were cash flowing the deal, you could take inside of our apartment or our commercial property screener, you could put in your rents and all of your expenses, and you could put in the amortization of 20 years. You could put in the rate that they gave you. You could put in the LTV and determine if the property is considered a go based on their debt service coverage ratio with their carve-outs that are industry standard. The presets in the software are 75% LTV because that seems to be the conversation starter. But here's what we all know about commercial banks going in. On the property side, not the sponsor side, but on the property side of the discussion, there's basically three things that they all are going to look at as we go in. First is NOI. What's the NOI of the property that we're talking about? The second is what's the capitalized or appraised value of the asset. And the third is what's the debt service coverage ratio. And if any of them wanted to admit it to us, that's really the three things that they're looking at on the property side to determine whether or not they even want to have a future conversation with you. So they'll put up these walls like they just did with you, even a pro user like you. I mean, they're putting up walls saying, well, here's our intakes, right? What if you change the conversation around and you had a software that actually gave you output on a one-piece sheet of paper that you could electronically send to them? that is written by a banker for them to interpret on a one sheet of paper within 1 minute, whether or not this is a loan that fits their criteria. And you sent that into them as a conversation starter and said, hey, here's my transaction. Would you like to talk to me about it more? Wouldn't that be a totally different bank conversation than one you've ever had?
Sure. No, absolutely. I mean, typically what we send is, just to get the process going or to see if they have any initial interest. Well, we have our own financial modeling tool that we built out, proprietary to us for our niche. Yeah. And then we send over more of an executive summary or, a higher level business plan, with the property and kind of combine the two together and, hand them a little package, not too much, nothing too overwhelming, but just enough to to whet their palate and see whether or not they'd have an interest in the project.
Right.
That brings me to my next question on a turnaround project, something to where maybe the NOI today, as it sits, wouldn't be sufficient for what we know is going to get any lender excited. But so does your software allow you to put in pro forma information or add any kind of additional notations about, this is where the NOI is at today, but, based on, 12 or 24 month projections, this is where we expect it to be. I mean, help me better understand how you would explain that process through your software and through that one page that it spits out.
Yeah, absolutely. So we have that right inside of our screeners. It's a clear walkthrough. You have a place where you're putting in today's rents and then you're putting in what you think they can be based on your repositioning. And that pro forma stream comes out to the banker. And obviously, if you're doing pro forma, our software is going to let you tell the banker that upfront. If you're starting up or if you're somebody that's newer in the business and you're saying, geez, I need a way to communicate what I'm doing to these banks, or you're somebody as a seasoned pro like you and I who are using it, it becomes the ultimate conversation starter, different from anything they've seen before. And what they tell us is they actually come back to us, and what the groundswell that's happened with us with our one sheet is these are the people that everybody in your audience, you and I, they're marketing to find us every day as bankers. They really want people who've taken the time to pre-screen their deal like what you just did. Mm-hmm. And you're doing it at even a higher level where you're providing the executive summaries and more, but you're also waiting for a period of time before they answer you. We're in the digital age now. Let's make them answer us right now. You and I don't have time. And the other one in the audience, we don't have time for the bankers. The deals are fluid. Things are flowing. We need to know our regulated bank can or can't do the deal. Now, we love the regulated bank because it's the fairest place for rate and terms that we can get today. But we need to be efficient with how we communicate with them. So if we put in front of them a one sheet of paper that has deal metrics that are clearly written in their language, which tells them DSCR, lender underwritten value, whether or not there's implied equity based on LTV driven value in the deal, and then shows them income expenses on the property today and the repositioning, and then says to them, would you like to connect, accept, or pass? And it's an immediate discussion. It's, do you want to see the deal? So what happens to the banker is the banker looks at the numbers and says, whoa, this is a transaction we can do. So suddenly all the rest of the work that's going to happen for you as sponsor validation becomes secondary in the process. Mm-hmm. Banks are always going to verify everything that you tell them on the piece of paper. The software is only as good as your input.
Sure.
But the conversation starts on such a different footing versus you and I and everybody else taking in a wonderful executive summary, pro formas on legacy software, putting it into the bank, and then waiting for a reply. And how much do you love to wait?
Yeah, right.
No, I want to know today.
I want to know today.
Deal. I have an offer into a seller. Can you do it?
Just don't send it on a Friday because the banker will be out golfing.
Right. Well, but this goes right. We have the ability through commercial and success to send it right to his phone.
Okay.
So we have the ability now, and that
do you have a database built in into your software of local banks in a particular region, or are you saying so that phone number would be input into your software, and then you've got some kind of
Right.
that happens?
So that's happening now. So right now, our users like you and I would download, print, and share our one sheet, which is the result of the program from our inputs for whatever type of transaction we're doing, be it mixed use, be it commercial property, or be it rental property. We're going to put in our numbers, and we would download, print, and share with our banker. Our 2.0 version, which will be out by the end of the summer, is actually going to connect directly to bankers. Because the bankers have said to us, hey, we want to meet these people. Whoever is out there using software, investing in themselves and showing us that they understand a little bit of our language. See, their biggest complaint, and it's funny because none of us ever consider anything from the banker side. And now I have a commercial banker as a partner, Kevin. And Dan and I, we get along great, but we're like the odd couple. You know, I'm the entrepreneur, he's the banker. There's still that in the room.
Sure.
You know, so he's always advocating for the banks. He says to me, John, you don't understand. These bankers, they actually want to do your transaction. Some of the biggest things that happened are unprepared borrowers who don't understand what we go through to underwrite their loan. I've written software here to open conversations so that the banker knows that the borrower now understands some of the metrics of the commercial lending process. Mm-hmm. The banker says, I want to meet that person because they believe it costs them money to tell you no.
Right.
They believe it costs them $3,500 or so per loan in certain circles to tell you no. And I say, how the heck do you guys get that? But that's for another day. But that's what they think. They think it costs money to reject the transaction. And as we know, over half the transactions nationwide can get rejected at any given time.
Sure. Okay. Well, the big question that it brings me to is the cost. What are we looking at as far as the cost of the software, John?
Well, you know, everywhere I went was I should be charging $1,500 for the software. It's legacy software or it's impactful software. It's this, it's that. I said, no, we don't want to do that. We want to get the price into everybody's hands because we're passionate about getting the conversation changed nationwide between borrowers and bankers. We want to take the mystery out of the process and have a conversation starter that everybody can afford. So when we launched, what we did is we put our basic screener pricing for depending upon what property you have. So in your case, you'd probably use the rental property screener versus the mixed use screener, let's say. But we have different applications and screeners, and we are at $147 a year for a subscription to one.
Okay. That's very affordable.
Yeah. And we do bundles where we package a refinance version compatible with the same one for those of us who have properties to say, hey, I want to refinance. I want to begin the conversation. Let me see how well I've repositioned this property. You can get into the software and play with what if scenarios on asking prices. I've had people use the software now to go out and negotiate purchases with sellers and say, hey, according to the software I have, the bank will not give me any more than this on the property at 75% LTV. I can't pay you what you're asking. I won't get the bank loan. Mm-hmm. And been able to secure it from a seller. I've had sellers use this software to defend their asking price to buyers.
Sure.
To say, no, you can borrow against my property. Here's the numbers.
That's interesting. Good deal.
Yeah.
Well, very interesting. So for those that want to go check it out, they can go over to, is it commercialloansuccess.com? Is that the main website?
Yep, commercialloansuccess.com. And for listeners today, we always like to give something free to the listeners to be able to have them get some value out of listening to us yak all day too. And if they go to web.commercialloansuccess.com/Kevin for you, so it's web.commercialloansuccess.com/Kevin. We've got chapter 2 of our upcoming book, Commercial Loan Success, that's in there for them for free, which is a composite list from us of what we think you need to do first to prepare to raise capital from a banking institution or private lender. And it also gives them a demo link to our software where they can get it at a discount.
Okay, fantastic. Well, thank you for that gift. And again, it's web.commercialloansuccess.com/Kevin. Is that correct? Okay. Yeah. Guys, I'll make sure I'll put that in the show notes for you. And John, we're running out of time here, but I really want to get into what I like to call the golden nugget segment of our show. And that's where we're going to kind of wrap things up for the day as well. And you've given us a ton of great advice, lots of wisdom, lots of golden nuggets already. But if you had just one final golden nugget of advice or wisdom that you could leave with our listeners that may inspire and motivate them as they progress in their real estate investing career, what would that one last golden nugget be?
I love it. So yeah, I mean, if I look back on mine, as you progress, one of the things you have to realize is as your transactions get bigger, so does the demand on due diligence. Mm-hmm. And invest in yourself, spend on due diligence on your deals. The deals that are 200,000 have a different level of due diligence when they're 2 million. And I can tell you from experience, you feel a lot better when you lose 20,000 in due diligence than you do when you lose 200 to 500,000 because you made a wrong choice.
Mm-hmm. No, absolutely. I mean, that is so true. And, it's interesting that you bring that point up. I mean, when we buy a property, we do lots of due diligence, but one of the things that we never go without is a survey and a environmental inspection. And I was having a conversation a few months ago with an individual that was buying a property. It was a mobile home park. And his question to me was, do I really need to get an environmental inspection? I mean, it's been kind of the same thing, for the last 35 years. This guy developed it. And, is it really worth spending I think it was $2,500 what he was quoted.
Yep.
I said, absolutely. I mean, we got a property. I gave him an example. We've got a property we've been working on for quite some time. And, we knew that there was a commercial parcel in front of the mobile home park, and we knew that it had been a gas station at some point in time. So we knew we were going to have some issues there. Yep. But we had no inkling whatsoever that there would be any issues on the two parcels that made up the mobile home park, because it had always been a mobile home park.
Okay.
Well, we come to find 3 buried on the mobile home park parcel, 3 buried petroleum tanks that were actually inside one of the parcels for the mobile home park. Oh. Big. And they were like 60 years old. I mean, we didn't even go any further. We just went ahead and back. We were okay with a little bit of a remediation project, given the right price. And, we were okay with that risk threshold, but we surely, it became too big of a mountain to climb, and we backed away from the deal. But, if that mobile home park, if that had just been a mobile, like if this guy was just selling the mobile home park and maybe he had sold off that commercial parcel to someone else 10 years ago, whoever was buying that mobile home park would have thought, well, I mean, things have always been a mobile home park. I mean, that other parcel up there, that's 50 yards away, and whatever. Why would I even think that there's anything else in this mobile home park that could have occurred as far as environmental contamination? And it's going to be a costly one. I mean, you're talking about thousands of dollars, and we don't know if it leached into the into the underground water source or anything like. I mean, there's lots of factors involved. We backed away before we got too deep, but I'm just basically reinforcing your point of always spend the money on due diligence. I mean, don't skimp there. That's one of the areas that you do not skimp.
If you ever want to have me back for a fun show, remember I'm a land developer. And we could do a due diligence show and have the audience laugh out loud with the stuff we found on land over the
I love that. That sounds like a lot of fun. Yeah, we're going to book that when we hang up here.
I love it.
Fantastic. John, this has been a lot of fun. I really appreciate you coming to the show. And guys, to learn more about John and his company, go visit him at commercialloansuccess.com. And I'll be sure to put his website as well as that special link where he's going to give away the free book to you. All that's going to be in the show notes. So John, this has been an absolute pleasure. You take care, my friend, and we'll look forward to having you back in the future. Okay?
Kevin, thank you.
Congratulations! Now you've got more of the best tricks of the trade in building massive amounts of passive income from real estate. For more amazing resources, visit realestateinvestingforcashflow.com. And we'll see you next Monday morning.